Okay, so you got a middle schooler and then...
Three middle school. Yeah.
3 all in middle school.
Yeah.
Oh my goodness,
8
that's all.
and 2 6th graders.
Okay. Well, hello friends. Welcome back to another episode of The Homestretch. I'm Nina Soden with the Soden Team here in North Alabama. Your coffee-fueled realtor here to break down the real deal on all things real estate.
And I'm Kat Frisby with Victorian Finance, your certified mortgage math nerd, here to make the money side make sense.
As always, before we jump in, a quick disclaimer. Kat is a licensed mortgage lender and I am a licensed realtor, but this podcast is for informational purposes only. For advice specific to your situation, please speak directly with your lender, your realtor, or your favorite financial pro.
All right, today's episode is all about the mortgage payment, that magical number that shows up on your loan estimate and becomes part of your life for the next 15 to 30 years.
And spoiler alert, it is not just your loan amount divided by 360. There's a lot more baked into that monthly payment than most people realize.
So today we're breaking it down. What actually is included in your mortgage payment, what can make it go up or down, and how to plan for it long-term like a boss.
All right, Kat, let's start with the basics. What is in a typical mortgage payment?
Most mortgage payments are made up of 4 main parts. We call it PITI, principal, interest, taxes, and insurance.
PITI. Got it. Okay, let's walk through each one.
Okay, so principal is the amount you borrowed, your base loan amount. Interest is the cost of borrowing that money, what the lender charges you based on your rate.
Okay.
Taxes are your local property taxes. Those go to your county or city. Insurance includes your homeowner's insurance and in some cases, mortgage insurance.
So when buyers ask, what is my monthly payment? You're not just quoting the loan, you're quoting the entire package.
Exactly. And depending on the type of loan, there might also be other pieces added in like HOA dues, flood insurance, or special assessments, but those are usually separate from the loan amount.
So let's talk about what can actually change that payment. What makes it go higher and what makes it go lower?
Great question. So your payment is mostly affected by these 5 factors. Your loan amount, obviously. Higher loan equals a higher payment.
Yeah.
Interest rate, even 0.5% difference can add up over 30 years. Your loan type, FHA, VA, conventional, they all come with different insurance and cost structures. Property taxes, these vary by location and can change every year. Insurance premiums, if your coverage goes up or you switch providers, your monthly escrow payment can change.
And we've seen that happen, especially when someone's tax value gets reassessed or their insurance increases after, say, a storm or major claim.
Yep, that's why even with a fixed rate mortgage, your monthly payment might adjust a little over time because of changes to escrow.
And for folks who aren't familiar, escrow is the part of your payment that goes towards taxes and insurance. And your lender holds that money in a special account to pay those bills when they come due.
Right, and if your taxes or your insurance jump, your escrow payment goes up and so does your total monthly payment, even though your principal and interest stay the same.
So, Kat, what can buyers do to plan for their mortgage payment long term?
So first, know your full payment, not just the base loan amount. Too many buyers also only look at principal and interest and forget all the other parts that we just talked about.
And second, build a cushion. Just because your lender says you qualify for a $2,200 payment doesn't mean that's what you should spend.
Yes, exactly. Think about future expenses, kids, cars, job changes, emergencies. A little breathing room in your monthly budget can make a huge difference.
And keep an eye on your escrow statements. If your taxes or insurance go up, your lender will typically adjust your payment once a year.
And pro tip, if you refinance or buy a new home, get an updated quote for taxes and insurance before closing so your escrow estimate is accurate.
And finally, if your goal is to pay off your loan faster, consider adding a little extra to your principal each month. Even $100 can shave years off of your loan.
Yes, just make sure it's clearly marked as a principal-only payment when you send it in.
Let's recap what goes into your monthly mortgage payment. Principal, what you borrowed. Interest, your loan rate. Taxes based on local property values. Insurance, both homeowners and possibly mortgage insurance.
and what affects your payment, your loan amount and interest rate, your loan type, changes to property taxes or insurance premiums, annual escrow adjustments.
Planning ahead means knowing your full payment, budgeting wisely, keeping tabs on escrow, and having a little cushion for the unexpected.
Because at the end of the day, your mortgage payment is more than a number. It's part of your financial foundation.
Okay, if you're looking at homes in North Alabama and want to understand what your true monthly payment might look like, reach out. I'll help you run the numbers and match the right home to your budget.
And if you want to break down your payment, look at loan options, or run a custom mortgage estimate, I'm your girl. No pressure, no jargon, just real numbers and a clear plan.
All right, y'all. Next week on the home stretch, we're diving into financing options for investment properties. Whether you're thinking about your first rental or expanding your portfolio, you will not want to miss it.
Until then, subscribe, leave us a review, thumbs up, and send this episode to a friend who's getting serious about the home buying process.
Thanks for hanging out with us. We'll see you next time on the home stretch.
Hi, y'all. We did it.